must have heard that stock markets have an upward bias. This simply means that in the very long run, markets have shown an upward trend. Be it after the 2008 housing crash, Satyam scam, demonetization, COVID or any other war. But still many people feel scared when it comes to investing for many reasons. Maybe somebody you know lost money in the 2008 crash. Now there are many ways to invest in the market. First is when you research and individually pick stocks and build your portfolio. Then there are mutual funds, ETFs, etc. Many people don't have the time or required skill set to individually pick stocks to invest, so the next best option comes to be mutual funds. There are hundreds of mutual fund schemes. Even mutual funds that have performed relatively less well in the past may have given you higher returns than normal FDs. Hi everyone, this is Chehal Verma, and in this video we will cover what are mutual funds, how they work, types of mutual funds and how to invest in them. First of all, many people think that mutual funds are only for investing in the stock market, but in reality you can invest in debt mutual funds, hybrid mutual funds and money market funds. But today we will focus on equity mutual funds. The purpose of equity mutual funds is simply to give you more exposure to benefit from the growth of the Indian stock market. Mutual fund is basically a fund which lets you pool your money with other investors to mutually buy stocks or other investments. This basically means that people like me and you put some money in mutual funds which helps them build a big pool of money. This pool of money is called their AUM or assets under management. For example, if the total AUM is 1000 rupees, which is divided into 10 units, then the per unit price will be 100 rupees. This per unit price that you can buy or sell is also called their net asset value or NAV. Now this company has a team of experts who then research on stocks or other investment opportunities and invest that AUM accordingly. For doing this for you, they charge a certain fee or expense ratio. Now, there are many types of mutual funds, but let's discuss major types of equity mutual funds. First are index funds, which simply track and replicate the performance or returns of a particular index, like Sensex, Nifty, etc. Now, these funds usually have lower expense ratio because here the fund manager does not actively research or pick stocks. Second are large cap funds, which invest minimum of 80% of total assets in large cap stocks or the top 100 stocks. One interesting fact to note is that in the long term, index funds have usually outperformed large cap stocks, which also have higher expense ratio. Third, mid cap funds, which invest around 65% of total assets in mid cap stocks, which are placed between 101 to 250th rank according to market cap. Fourth are small cap funds, which invest around 65% of total assets in small cap companies. Fifth, multi-cap funds. They usually invest around 65% of their total assets in large cap, mid cap and small cap companies in different proportions. And sixth are large and mid cap funds, which invest around 35% of total assets in mid cap stocks and 35% in large cap stocks. Here the volatility is usually lower. These were mainly on the basis of market cap. Then according to investment strategy, there are three other types. First are sectoral funds, through which you can invest in different sectors like IT, banking, infrastructure, defense, etc. Second is focused equity fund. Now this fund invests only in a small number of highly researched securities for higher returns, but this definitely comes with a lot of risk as well because there's basically no diversification to protect you from any risk. Third are contra funds. Now just like the name, these funds follow a contrarian strategy. They try to find underperforming stocks and buy them at lower prices, assuming that they will come back up in the long term. One major drawback that these funds have is that due to their contrarian investment strategy, they might end up underperforming in bullish markets. Then there's also ELSS, which is Equity Linked Savings Scheme, which is the only equity mutual fund which offers tax benefits up to 1.5 lakhs under Section 80C of the Income Tax Act 1961. These funds invest a minimum of 80% of total assets in equity and have a lock-in period of 3 years. Lastly, how to invest in mutual funds. You can invest in mutual funds through the trading platform of your stockbroker. You can start your mutual fund SIP with just 500 rupees. That's the end of the video for basics of mutual funds. In the next video, I will share top 5 things to check before picking a mutual fund.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.